If you are looking to build wealth in 2025, these are the assets that will help you get there. The first one is stocks. Investing in stocks is like buying a little piece of a company. You have your little sliver of pie. When that company does well, then your sliver of pie is worth more. Now, if you sell that stock, you can sell it for more than you bought it for. You need to decide how you're going to pick your stocks. You can pick them one at a time, or you can pick a big group of stocks like in a mutual fund or an index fund. Now, index funds are my favorite because you get to buy a bunch of different things all at once. Now, this could look like the index fund FXAIX. This is on Fidelity and it's one of their 500 funds. As of November 2024, this fund has approximately 500 different stocks. And these include names you know like Apple, Microsoft, and Amazon. This means you're not putting all your money in one pot and hoping that's the right pot. You are buying a lot of different little things. These funds are passively managed, which means when one of those 500 stocks in that indexed fund stops performing, it gets kicked out and they put something else in its place. This is with no work from you. It just happens automatically. There are a lot of different index funds that specialize in different parts of the market. So if this mashup is not your jam, there are other options. You want to pick one that matches your risk tolerance and return desire. If you want to set up something like this on your own, you can use an online brokerage like Charles Schwab, Vanguard, or Fidelity. And if you haven't already, I would start with a tax advantaged account like a 401k or a Roth IRA. If all those accounts are maxed out, then I would move to that traditional brokerage. The second kind of asset that you want to buy in 2025 would be gold or hard assets. Gold is a physical asset, so you're not buying part of a company. You're not hoping that that company will do well and that CEO will make smart moves. You are hoping that the gold will retain its value and grow in value. Other hard assets you could consider would be silver and platinum. There are other things that you could consider a hard asset, like machinery, collectibles, even oil. But for a lot of those, it's hard to predict their rising value and harder to store them. I don't know about you, but I don't have a place to store a lot of oil in my backyard. There are no guarantees on the return of gold either, but it's a very simple process to buy gold. You can even buy 1-ounce bars of gold and platinum at Costco. These sell for around $2,000, but obviously the price changes regularly. And $2,000 might sound like a lot to some of us, so in that way it's inaccessible because the smallest possible investment that you could make at Costco at least would be $2,000. You can't start with $10, you can't start with $100. There are a few downsides to hard assets to think about. They can get damaged or stolen or simply misplaced, but it does give you something valuable to hold on to that's not affected by the online market. In the last 20 years, the return on gold has been 10% overall. Not brilliant, but decent. And that third asset that you should be thinking about buying in 2025 to grow wealth would be real estate. Now, I'm not talking about buying an apartment complex tomorrow. That's probably not accessible for a lot of us right now. Real estate is simply something physical that you can own that often appreciates over time and creates cash flow. This is simply another way that you can diversify your portfolio. One of the simplest and cheapest ways to invest in real estate is to buy a REIT. These are real estate investment trusts, and they're kind of similar to buying a dividend-paying stock. In order for a corporation to maintain their REIT status, they have to pay out 90% of their taxable profits. This is a great option if you want to add real estate to your portfolio, but you're not ready for the hassle of becoming a landlord. The most obvious way to get into real estate is by buying a rental property. The main problem is that you have to come up with a minimum down payment, often of 15 to 25%. And that can be a lot of money and hard to come up with on your own. One way around this issue is to buy a house for yourself and live in it first. For many first-time home buyers, you're looking at about 3% down as opposed to 15 to 25%. Then you live in that house for a couple years, save a new down payment for another place for you to live, and then you move to that new place and you just keep your old place as a rental property. I want to know, what kind of assets are you going to be investing in this year? If you enjoy content like this, please hit that like button and subscribe for more. See you in the next one.